Hello there, traders. Welcome to the live stream. Going to get set up for a couple of seconds. There we go. It is Tuesday. It's Tuesday, the 23rd of July, and we're going to be going over the markets. We're going to be taking a look at some of the FX pairs to watch this week, as usual. Going to talk a little bit about the data coming up for your week ahead for you to keep your eyes on, as well as some charts of interest and some interesting charts that I want to take a look at as well. As always, welcome. Give me a wave in the chat. Say hello. We've got Ratishin. Welcome. Hope you're doing well too. I'm doing good. Thank you. Joffrey, welcome. Hope you're well. Yeah, but we're going to be going over a few markets of interest, and at the end we're going to have a guest joining us as well at some point. So I will bring them in when they arrive, and we'll have a little chat to them, and yeah, we'll go from there. So just checking from my end that everything's working okay. Should be all good. Let's do what we always do. Let's bring up some news, right? We're always looking at our economic calendar. Want to look at what's coming out for the week ahead. We want to be able to be very predictable in terms of what we're looking at. We want to be very prepared for the week ahead. So what have we got coming up? So we haven't really had much data for the past couple of days, right? It's been fairly low on data. We had a sort of rate cut in China of the 1 year and 5 year loan prime rates. So the rates in China did come down, which is a little bit of a shock to the market. But other than that, we've not really seen anything in terms of key data. The only thing we've got coming up at sort of 3 o'clock is the existing home sales and the Richmond Manufacturing Index. But existing home sales can be a little bit of a market mover, so we could potentially see something around about 3 o'clock. Hello, Derek. Oh, I don't know what's going on here. I don't want to log in. Hi, Derek. Welcome to the live stream. Hi, CG. Good day to you. So, yeah, let's take a look at what we've got going on for the rest of the week, because bit of a boring couple of days in terms of data drops, but it all kicks off on Wednesday, and it's a pretty big day tomorrow. We've got the French, German, UK and US manufacturing and services PMI data. And a couple of these I'm quite interested in. Obviously, when you're looking at sort of the different kind of economies and you're looking at manufacturing and services PMIs, the different countries are specialized in different things. So in Germany, manufacturing is quite important. So to the euro, they want to see growth in the manufacturing PMIs. Obviously, there has been a good time where if we look at this from a graph point of view, the manufacturing PMI has been fairly poor. We've been on a very steady decline since 2021. It kind of peaked in August of 2023 to the downside. And then the ECB were cutting interest rates, trying to help support manufacturing in Germany. And that has helped. We can see the trend is a little bit more to the upside on the German manufacturing PMI. So I'm interested to see how this one kind of plays out going into tomorrow. Do we see a continual sort of path towards growth there on the German flash manufacturing side of things? And then we've got the UK. UK was revised down previously, but the one that we really want to be looking at is services PMI in the UK. Services up. Could potentially be up to 52.5, with a revision higher at 52.1. And then the big sort of data of the day is coming towards the end of the day. Bank of Canada expected to cut interest rates by 25 basis points. And that's why we've been seeing a lot of weakness in the Canadian dollar recently. And then we've got flash manufacturing and services PMI out of the US as well, still above 50, still showing growth expected. Okay, so Wednesday is going to be a big day. On Thursday, we're going to touch upon the core PCE price index, what it is, why it's important, for the markets and whatnot, because this is going to be a very substantial sort of reading. It was actually forecast to come in at 0.2%. Its expectations have dropped a little bit to 0.1%, but the Fed will want to see a move lower here. The Fed will want to see, market participants want to see core PCE coming in a little bit lower as well. So yeah, that's our sort of data for the week. Keith, welcome. Hope you're doing well. Rye Guy as well. Matt, welcome. Vincent, hope you're doing well, buddy. Yeah, got lots of you in today. Hope everyone's doing well. Hope everyone's had a good trading week so far. We're going to take a look at some key charts of interest. Let me know what you guys are trading. Let me know what kind of markets you want to take a look at. And yeah, we'll go from there. Some important data as well. Let's check out the strength and weakness table, because I want to show you what this is kind of highlighting to us this week. So we've got some quite significant changes in terms of the strength and weakness. We've seen a little bit of downside in euro last week, same with the pound. So just kind of bringing in a little bit of those gains that we've seen recently. Could be because of the little sort of opportunities in terms of those people that have been long recently taking a little bit of profits. You know, dollar index was in that important kind of support zone that we touched upon. The dollar gained a little bit off the back of that move from -5 to -4. Is that a reversal potentially? According to the currency strength meter, that would be something to be really watching for, a dollar reversal there. And then we've got the New Zealand dollar being one of the weakest currencies at the moment. So I really like Kiwi shorts at the moment. And then I'm looking to try and take advantage of that against currencies that are getting stronger. So we've got the Swiss franc, for instance, Japanese yen. I think are good markets to have a little look at in terms of strength. Kiwi dollar, I like as well, kind of going off from last week's data as well. So yeah, this is just to kind of break it down into easy sort of viewing on the strength and weakness table. Want to be looking for long Swiss francs, want to be looking for long Japanese yen, want to be looking to short Kiwi dollar, potentially the US dollar, but we've got a reversal signal on the dollar, and we want to be short CAD. And I don't mind being short CAD until sort of the data tomorrow, essentially. So these are the currency pairs that I'm watching right now. And out of those pairs, I'm looking at only sort of 4 of them that have kind of really given me an idea of what we can see. So CAD Swiss, CAD yen, Kiwi Swiss, and Kiwi yen. I kind of highlighted there. Now, if we go down to the 50 moving average, strength and weakness table, a little bit different, but still we've got some similarities, right? We've got Kiwi on the short side, CAD on the short side. Long side, we've got the Swiss franc. The only other thing on the pound side on this 50 moving average is the pound is quite strong as well. And obviously the Japanese yen strong on this side, but pound was at +7s, and that could potentially be a sign of a reversal. I haven't got enough data to back me up in terms of the 50 moving average one, so I am keeping a sort of a log of what's going on in terms of the 50 moving average. You know, I am creating a strength meter with regards to how the markets react in terms of where it is in relative to the 50 MA, but I don't have enough data to back it up. If I go to my currency strength meter, I've got like 4 years, just over 4 years worth of data that's kind of backing that up. So you know, I trust this more than I trust the 50 MA, but it's just still interesting to see that they're kind of singing off the same hymn sheet in a little way. But yeah, this is what I'm kind of focusing on in terms of strength and weakness this week. Some questions. Joffrey, thoughts on Swiss yen and Kiwi yen? Yeah, I'll come to those in a second. Matt wants to talk about the COT reports short, contracts for Kiwi substantial to longs. Yeah, that's what I do still see that as well. And then we've got some other questions firing in. So let's go, before I get into those ones, let's get into a couple of them. So Joffrey wants to take a look at Swiss yen and Kiwi yen. Let me just go and jump into those charts of interest. Now, again, always when you're looking at the currency pairs in terms of pairs, right, you want to be looking at sort of how individual currencies performing in terms of the majors, right? So you're trading Kiwi yen, but you're trading the New Zealand US dollar versus the dollar Japanese yen. And we know that the yen is a strong currency right now. Okay, we were getting this really nice sort of unraveling of this recent sort of bullish price action, or this bearishness to the Japanese yen. And we're starting to see some decent yen strength come through into the markets. And this was inevitable, right? It was gonna come at some point, right? We were going to see it at some point. It was just a matter of when it was going to happen and how was it going to happen. And what we had was intervention, and then the markets just kind of stayed on the back of that intervention, whether it's seen this as its opportunity to start taking some profits off and reposition themselves in the near future, potentially. You know, if we look at it from the daily chart at the time, you know, we were quite far away from the moving average. Markets took that now, and now we're closing below it, and we've started to press on. But yeah, I like Kiwi yen short at the moment. It's just, how do you get short and where do you get short to? You know, maybe you're looking at this kind of demand zone down here towards that sort of 91 handle. You can kind of make it a little bit bigger, maybe towards that sort of 92 area. And if you are looking for that, how do you kind of get on the back of this? Because if we look at it from a 4-hour time frame, price hasn't really given any significant pullbacks. We've only had very shallow pullbacks in the market. So you need to look for something very similar. You know, can we get a shallow pullback and then a continuation to the downside? So, you know, I would be looking at some kind of retracement phase on this, perhaps back into this kind of area here, where you can see we kind of had that pullback in the market around about that 93.70, and then I'd be looking to try and capitalize on something like that, a little bit of a move down into the higher time frame demand zone in the market. But yeah, this looks pretty good for continuation to the downside again this week. Market is very bearish here right now. Don't really want to go against that. Still really like that Kiwi short. I mean, last week we were looking at Euro Kiwi long, pound Kiwi long, and to be honest, I wish I kind of stayed in my Euro Kiwi long, because it's just continued to trade higher. So I was long on this breakout of this area here, just here on Thursday, and the market continued to rally higher into my kind of overall targets there. But Kiwi is a nice currency to have a little look at. So in terms of Kiwi yen, Joffrey, I like shorts on that. I'll just be waiting for some kind of retracement. Swiss yen, a little bit different for me, because I've actually got a long bias towards the Swiss franc right now. And I'll show you the reason why I've got a long bias to the Swiss franc shortly. But there are seasonal and commitment of trader reports signs that we could be seeing a little bit more upside to the Swiss franc in the very near term, and I'm talking probably for this week maybe, before those conditions could start to change. So although we're seeing a lot of downside to Swiss yen, if we compare it to kind of other markets that have been trading against the Japanese yen, you know, like the pound, for instance, even sort of euro yen, hasn't quite moved as much as those pairs at the moment. So if I was going to go and trade the Swiss franc, I'd want to go and trade it against weaker currencies. So yeah, Kiwi Swiss short is like I said, quite high on my list to take positions on this week. So I'm just waiting for price to give me a little bit of a pullback on those type of markets. Going on to Matt's comment here, we've got COT or reports, shorts, contracts for New Zealand dollar to longs. Yeah, so this is what I'm kind of seeing in terms of commitment of trader reports right now. I'm looking at the you can see the New Zealand dollar here, right? There's been a substantial change in long contracts on the commercial side. So we've had a 75% move higher, and that's measuring the change from week to week. So 75% increase in long contracts on the New Zealand dollar. And that's almost to be expected from the commercials, right? Because the New Zealand dollar is weakening, so they're going to buy it to hedge international trade risk. The commercials, on the other hand, are adding to their short positions. We've had a 39% increase in short positions from last week. And the non-commercials are hedge funds, trend followers, large trader, right? So I'm looking to potentially continue this short pressure until we get some kind of substantial change on these indexes. Essentially, you know, when we start seeing like the 100% signals on the 6 month and 18 month, and then, you know, I'll really start considering, you know, potentially changing my bias in the short term. So looking at the New Zealand side of things, yeah, short contracts increasing, decreasing those long contracts from hedge funds and things like that. So I want to continue to be on the short side of Kiwi for now. But while I'm on the committing to trader reports, I will just kind of have a little look at sort of the Swiss franc and the reason why I want to be a buyer of the Swiss franc right now. And that's because we've got this 100% signals here, right? Now, just because there's a 100% signal doesn't necessarily mean that the market is going to move in that direction. But when we break down the difference in sort of the long and the short contracts here, we can see that the futures contracts, the commercials, are still adding quite heavily to long positions. And then if we look at the non-coms, they're adding quite heavily into short positions. And the reason being is because they are trend followers, and the Swiss franc is technically a little bit weaker with the fact that the Swiss National Bank are trying to cut interest rates and things like that. But if we look at the short contracts, we can see that they're actually higher than the contracts that were formed here, okay? And that was back on April 2019, the 22nd, right? Or sorry, the 29th of April 2019, right? And we didn't have a 36-month signal there, right? But long contracts were in a very similar place from the commercials. On the side of the non-commercials, so the hedge funds, the trend followers, they were looking at being quite heavily short, right? We're at similar levels now. And look at how price reacted from there. We had a nice little rally up before we had a little bit of a move down, rally, and then we had a considerable sort of rally over a long period of time. So I'm looking at something similar here, right? We've had a couple of signals, but that 1.1 level seemed to be the area that the Swiss franc futures were holding at, and we're starting to see a little bit of upside there. So I'm quite interested in being a Swiss franc buyer at the moment, especially up into sort of the 115s. And another reason why I quite like it as well is because of the seasonal play we've got here, right? So on this seasonal chart, what we've got is the green line, okay, is the current year. So that's this year, how that's moving on the Swiss franc futures market. So Swiss franc futures, just invert it, you've got a dollar Swiss chart. And then the orange line is the average over the past 20 years. Now, what's interesting to me is how price follows the average. And this is how this software kind of breaks it down. So from all the years, so there's 48 years worth of data. There's a 72% correlation between current price and the average over 48 years. In 20 years, right, which is the orange line, there is a 79% correlation between the current year's price and the past 20 years. And then what we've got is election year. So it's an election year at the moment in the US. That can have an impact on seasonals. And we can see that 77% correlation between an election year and current price, right? So what this is telling me is that there is a significant correlation between what's going on with price action this year on the Swiss franc futures as there has been over other years. So that makes me want to be a buyer as well. And typically we top out around the beginning of August. So that's why I'm saying there's probably a week left of a little bit of Swiss franc strength, which is what I'm looking for within the market. Hopefully that makes sense anyway. If you have any questions around this, then let me know. But yeah, this to me, we've got so if I'm kind of building up a sort of picture of what's kind of going on, right? We've got a 100% signal on the commitment of trade reports, which basically means that the contracts have been the highest they've been in the previous 36 months, 18 months, and 6 months. Okay. We can see that the seasonal is telling us that we could be a little bit bullish on the Swiss franc. And then to add a little bit to that, we've got a Swiss franc that is gaining strength on the currency strength meter. If I just kind of peel out of this a little bit, we have a little look at the Swiss franc, which is the pink line. It came from those highs and it's starting to get back above that 0 line now, starting to point back north here. Okay, so that to me is a good chance. Yeah, obviously nothing's 100%, but I like the idea of buying Swiss franc. So I'm looking for pullbacks against weaker currencies. Kiwi Swiss being one of those. Market is moving to the downside here, trying to see if we can get a pullback. I've actually got a couple of alerts set around this area here, the 5360s on my other charts, looking to see if we get something like that essentially on Kiwi Swiss. But if we start to see any other kind of markets develop a weakness, so obviously we've seen a bit of CAD weakness recently. The market's just kind of, I'd say, ignored this previous volume. So it could test it on the other side. So I'm looking at kind of 0.65. Be a good place to see price hold, especially if we get a bit of volatility on the data tomorrow. Then something like that could be on the cards here for the Swiss franc. So yeah, hopefully that made sense. Let me know if it did in the comments. I appreciate your feedback on that. Let me know if that did make sense. I don't want to confuse anybody too much. Right, guy, I'm long SPX 500. I'm looking at for CAD Swiss and Pound Swiss on the short side once they break the range. Also, dollar index is ranging, and I'm looking to trade euro dollar once dollar index breaks to the downside. Yeah, right, guy, that makes a ton of sense to me from what I've just kind of been talking about. The only thing I would say in terms of the dollar index right now is that we've come back into this weekly area of support, and the market has formed a potential, it's not fully confirmed yet until we kind of breach the 104.50s, but you've almost got this head and shoulders pattern. We've consolidated in here. Price looks to be breaking that to the upside. So we might be seeing a move up to the 105 potentially. Obviously, if we reject here and the market feels like it wants to reject here and we get bad core PCE numbers on Friday, then that could obviously influence a little bit of dollar pressure to the downside as well. But yeah, I kind of like your thoughts on those. Euro dollar was formed a really nice sort of consolidation breakout recently. If you go look at it on the hourly time frame, had a nice sort of breakout of this, and the market's kind of trending lower here. So from a euro dollar point of view, you've got kind of a similar setup where you've got this potential sort of left shoulder, head, right shoulder. Is the market going to come and do something like this and try and trade a little bit lower? So yeah, for me, euro dollar is a good market to potentially notice or take a look at as well, with a little bit of a pullback coming in at these weekly highs. We had a very nice rejection on terms of a weekly bearish candlestick. So technical traders could be seeing this as an idea to try and trade a little bit lower. Long term, we might be expecting a bit of a break higher if the US dollar does start to weaken significantly. But this weekly chart's quite nice in terms of how price has been fairly ranged. But yeah, we rejected those kind of 1.09 handle, closed below it. Is that going to influence a little bit of selling going into this trading week? S&P 500 is interesting. S&P 500 is very interesting. Obviously, it's earnings this week as well. We've got quite a big earnings, actually. Let me see if I can get that up. Pretty sure if I go over to my Twitter page that I posted about that, I reposted some of the earnings coming up this week. So yeah, earnings this week. We've got Tesla, Alphabet or Google, IBM, Coca-Cola, Visa, General Motors, Ford, AT&T, Verizon, Comcast, United Parcel Service or UPS, Lockheed Martin, American Airlines, Southwest Airlines, Spotify. So yeah, we've got quite a lot of earnings coming up this week as well, which is going to influence the market here, especially from the S&P 500, NASDAQ, Dow Jones. But yeah, I quite like. I expected a rebound, right? This was the kind of area or zone that we were talking about in terms of looking for rebounds on the S&P 500. Yeah, we've kind of had that little rebound now. Market's kind of holding here. It's just how confident am I in seeing a significant rally back to the highs? Although I feel like it's the likely thing to happen. What's putting me off is the VIX right now. Obviously, last week we had a very strong volatility index. There's some weird US political headlines going around at the moment that Joe Biden is no longer with us, which could cause some significant volatility within the market. As obviously Kamala Harris, I think, would be taking over as president, considering she's vice president right now. So yeah, I'm just keeping an open eye onto volatility right now. S&P 500 is recovering because the volatility started to cool off at the beginning of the week. Why is it cooled off? Well, there's no data. There's zero data of what's going on right now. So don't really need to... I don't really expect high volatility on Monday, Tuesday, because there's no red folder data. So I'm looking to see, does that change towards this sort of end of the week? Do we get a little bit of a change in terms of volatility? And I think there's some data points that could change that. So yeah, the only one I would be a little bit cautious on is probably stock market longs. Just in case we get a deeper sort of pullback to what we've had, that'd be my only kind of thoughts here. But yeah, I was expecting a little bit of a rebound, but would I have traded it? Well, I haven't traded it, so that kind of tells you that I don't feel confident taking a position there right now. So we'll see how that plays out, though. So hopefully it plays out well for you, Rygard, to be honest, and hopefully it goes well. Asawenke, I am currently shorting the following pairs: euro, dollar, pound, yen, Swiss yen, and pound Swiss. Please look into those pairs. Pound Swiss is interesting. I like the idea of being short pound Swiss this week as well. I'm just waiting for a setup. I haven't had a setup yet. One of the setups that I was looking at was on Monday, I believe it was. Yeah, so Monday. Yeah, yesterday. I was looking at this potential triangle pattern forming. You can see I've got my alert down here. Market was kind of messing around here. I wanted to see a break below that. If I had the break below that, would have gone short on this. Looking to target around these kind of levels down here at the 114s, potentially the 113.60s. But we haven't had it yet. Price has not given me a reason to get short in this just yet. We could look at sort of how price is reacting now. We've got this kind of retest of the 50 MA on the other side. We've got 115.10 being tested. Arguably, again, we kind of had a sort of left shoulder, head, right shoulder. Is this an area where we start seeing some downside? You could look at maybe trying to sort of get involved around these types of levels, but again, I'm kind of looking to see where's the value in getting short here. You know, if I get short here, where am I going to put my stop that's in a safe place? Safest stop's obviously above the swing highs, but that's just unacceptable. Don't want to really have a stop loss that's 128 pips on a move like this. You know, you could be looking at maybe a 20 pip stop around this level, trying to look to maybe target the low first, then if it breaks, anything's a bonus. But nothing's really kind of shaping up for me here right now. You know, if I look at it from a 15-minute time frame, no really any kind of significant breaks in structure. Maybe if we kind of break in into new lows here, maybe that could be a sign to have a little look at in terms of pound Swiss. But yeah, right now I'm not really doing anything on this market. I had an alert, I had an idea. The idea that I wanted to see happen didn't happen, so I've not taken the trade. Over on this one, Swiss yen, I'm not trading. But if you were in the stream a little bit earlier, as I kind of went over that one. Pound yen, yeah, I mean, it's coming into some key areas, right? You've got this kind of high that was previously a strong resistance. Prices now come back into that, finding a little bit of support. But I don't particularly want to be buying pounds right now. I want to be shorting them. So I'm not going to really look to buy this market, and we're at support, so I'm not going to sell it either. Euro dollar I like. Euro dollar I really like. Ifran, welcome. Or Irfan, sorry. I haven't seen your name pop up in a while, so I hope you're doing well. Yeah, so sorry, your comment just says that well. I haven't even read it yet. So hi John, on stream after a long time, busy routine, only on the daily charts for the time being. Took only 2 trades this month. Took profits on ETH. I'm guessing is that Ethereum, and a loss on crude. Okay, so yeah, going back up to those higher time frames, not a bad option, especially when you're busy. You know, swing trading is good to do that. Taking 2 trades in a month's bold though. Bold. Yeah, I think that's why I kind of try and pick areas to get in on day to day. I know it can be difficult with different routines and how busy life gets and stuff. But yeah, 2 trades. To have the discipline to only take 2 trades, I really rate that. I really rate that. Right, guy, makes sense. Thank you. Didn't know the HNS. I'm guessing that's on Euro dollar, Joffrey. Could you please map out a trade with an example of your strategy? Yeah, I mean, we can use an example that I took last week if you really want to have a little look at a market that I traded. One of those was Euro Kiwi. I went long on the 19th. Yeah, went long on the 19th. Couldn't get an entry on the 18th because the market closed and I was trying to buy it. But yeah, let's have a little look then. So Euro Kiwi, I went long, right? So the important thing for me when I'm looking at trying to trade a market, right, is I want to know what's going on outside the charts, okay? And I say this to you sort of time and time again. I'm always looking for sort of, you know, why. Why am I going to be trading a chart? Okay, why am I going to be trading a particular price? Okay, why? It's like when somebody goes to me, selling euro dollars, you know, why? Why are you selling euro dollars? Is it because you have a back-tested strategy and it tells you that 80% of the time when this setup happens, it does X, Y, and Z, or, you know, your win ratio is 70 to 70%, and that's how you trade, then fair enough, right? But I always try and find a why, and I had to, because in my trading, technical trading, for me, was good, but wasn't good enough. There'd be times where I'd lose, where I think a setup was a very, very good setup, and I'd lose, and I never really understood essentially why that happened until I got into looking at fundamentals and stuff. But I always like to look at why I'm getting into a particular market, Okay. Now it can be something very simple. Could be something like, I use a lot of strength and weakness analysis in my analysis. So that's not necessarily macro. That's based off of technicals as well. So, for me, I have to have a why. Okay. Why am I getting involved with that market? And then once I've got my why, I can go into my other kind of process, So let's say for, why, I can say euro strong, New Zealand dollar weak. We can put other things into consideration, COT reports, weak Kiwi. We also had some, we had the European, or I should say EU French elections, which a far right party didn't, or I'll put fell, far right party risk fell, right? So you've got kind of like a macro, and you've got a sort of technical reason why I wanted to get long in this market. So once I've got the why, then what I look for are conditions around that. Okay, so the next step for me is conditions. If I've got a currency strength meter that's telling me I should be, buying Euro Kiwi, then do the conditions match that? And what I mean by that is essentially what happens on a chart, right? Okay, so if we look at what's going on Euro Kiwi, right? Did I have the conditions to say to myself, yeah, I want to be buying this market? Well, yes, I did, because if we look at it in terms of trend, right, we broke out of, let's say we broke this condition here where we've had downward channel, price has broken that. We've formed new higher highs recently. So in theory, what I'm looking for is, do the conditions match? I'm trading above the 50 moving average. Great. Which kind of all comes into conclusion with the currency strength meter. So if you've got the FX currency heat map here, I look at how the weekly is closed, what is price doing relative to the 50 moving average, stochastic, daily trend, daily phase, right? And on Euro Kiwi last week, everything was ticking the right boxes. It was ticking the right boxes for me, and it was ticking the right boxes for me the week before that as well. So if you look at sort of where last Monday was here, and then if you look at the Monday before, it was there. Okay, so really speaking, for the past couple of weeks, been looking to get long Euro Kiwi. Now, when you look at kind of the conditions around it and everything's kind of working well, right? You can say, yeah, conditions all good. What's my next step? Well, the next step from the conditions, if everything kind of ticks the boxes, it's just looking at entries, right? It's looking at strategy. It's looking at risk. So your strategy could be anything. It could be a moving average crossover on a lower time frame. It could be whatever you want it to be that you've got sort of tested results on. Now, for me, it's very discretional. I like to trade discretionary. So what I would kind of look at in terms of price action would be like, where's a significant area of resistance up here, potentially up into this zone as well, which is eventually the area that I wanted to see price come into. And then I'll look at sort of anything from volume profile, market profile, technical patterns, right? So if we look at the 4-hour chart, we can see that price is making higher highs and higher lows. Okay. One strategy you could look to implement is a break and close above a 50 MA. That would have only give you 2 trading opportunities. Price hasn't come back since, so you'd still technically be long on that strategy. But one thing that I really like to look for is if price consolidates and then breaks out of that consolidation, right? Because that's what we should see in a market that is going to essentially trend. Okay, if we see a consolidation, breakout, fail, something like this, that it's not working out. It's not doing what I want it to do. So there was a couple of occasions when that happened. First occasion was down here. Market formed a consolidation. We broke out. The market formed a consolidation in here. We broke out, retested it, rallied. Now I managed to get on a trade here Okay, so we formed a very common pattern that I really like to see when I'm trading markets, which is the market forms a resistance point, right? Forms a base. It then rallies into that base and it rejects. Now, what I want to see is a rejection that's very shallow, a rejection that is not very aggressive, because it tells me that sellers that got short here are probably going to get out of their positions at this point. And even if they try to get short again, they haven't been very successful. Buyers are taking the other side. Now you can see price then broke out of that. So that's where I went long. I went long here. My stop loss went below the swing low there. And then I targeted, well, my original target was up at 182.30, but I don't like holding trades over a weekend. So I came out with about a 1-to-1. Market kind of rallied up and I managed to kind of get out of a position there. Might have actually been less than 1-to-1, sorry. Yeah, it might have been around 0.75-to-1. So I don't hold trades over a weekend. So yeah, actually looking at it, let me have a look. How many pips was it? Wasn't a lot in terms of pips. It was 62 pips. So I had a 62 pip target. Yeah, and I think I had a 80 pip stop loss. Right. Now, because I don't hold trades over the weekend, there was no real chance of me to reposition into that. So yeah, I could have had nearly 2R out of that, but that's how I traded it. Does that make sense? So we go from, this is how I've always kind of done it, right? I want to look at why am I getting involved with the market? And like I said, it doesn't have to be anything too deep. It doesn't have to be anything too overcomplicated. But I feel that if I have a why, instead of just going to, like, let's say I go to a euro dollar chart, the price action looks bearish, I get short, right? If I have just a little bit more backing behind it, I feel more confident in that trade and I'll feel more confident holding the trade for longer, right? So I'm happy to kind of try and trade any kind of opportunities surrounding the move as long as the conditions are met and it kind of falls in line with a bit of strategy. Do you only trade breakouts or pullbacks as well? I try both. If I see any kind of opportunity there that meets my expectations of what that price could be doing, I trade both. I don't really have sort of anything that is almost like I don't have anything that's like, oh, there's a bullish engulfing candle, that's when I'm going to trade it, right? Like, I'm not only waiting for things like that, because if I was to wait for like the perfect strategy, I wouldn't get in on a position, right? Let's say these 4-hour charts in here. The only other thing that I like to look really at as well is volume profile and stuff on pullbacks and things like that. So if I was to look at volume profile though, I don't think I would have got a position in these markets, because I would have been waiting for a pullback here into some kind of volume. If that loads up, let's see if that loads up. Doesn't want to load up for some reason. Let's have a look. Inputs, row size. Let's go 20 or something. Let's see if it loads up. There we go. Maybe that point of control area there would have been a nice entry, but that was a Friday. Again, don't particularly like to hold trades over the weekend because of headline risks in the market. I definitely wouldn't have held it at this time, because I'm pretty sure that's when elections were still going on in France. So yeah, you got that kind of move in there. If I was to kind of stretch out the volume profile up to that area, you've got this little bit of a kind of area of volume, but look, price barely touches that and continues on. So I think for me, you've got to be quite discretional in how you enter the market. You can be very fixed. If I go to an hourly chart, and just looked at 50 moving average retests, then, I would have had 1, 2, 3, 4 trading opportunities in that sense. So yeah, I'd be looking at things like that. I mean, there's another sort of trading strategy that you can look at in terms of the stochastic oscillator, and that's looking at if we go to the 4-hour time frame, when price enters the upper end of it, so in the typical what would be over bought condition, that can be fairly bullish in terms of stochastics. So any kind of crosses back over for the K and D lines, you could be looking at opportunities long. So you've got one there, you've got one here, we've got one here, crosses back over here, crosses back over here, and those could have been all significant long signals as well. So there's multiple different strategies that you can use. I'm very discretionary in how I do things. I try and find key areas of support and resistance, or I try and find areas where I feel like these type of patterns I know in my experience have been very successful for me. So that is a pattern that I am very familiar with, and I trade quite often when I see them. There's been a period of time where I haven't seen them for a while, but I swear the past kind of couple of months, these have been absolutely everywhere. There was a very simple one on Kiwi US dollar as well. And I think we actually covered this in last week's stream. If you go to the hourly chart here, I think this was on the Thursday, right? Yeah, on the Thursday, we had this pattern building up, right? Now, if you were just looking at Kiwi dollar blind, and I was to pull this back to here, right, you'd probably say that's bullish, right? Because the market has rallied, okay? Consolidated. A lot of people would be looking at that. We've broke trend there, and the market's kind of putting back to the upside. So yeah, looking at the sort of pattern there, people would be expecting that. That's a bearish pattern though. This is a bearish pattern, right? When the market forms a base, okay, and then every push away has been very shallow, that is a very bearish pattern. So I looked for the breakout short here. Plus, I had a reason why. Why did I want to get short this market? Well, Kiwi was really weak. Kiwi was a market that was very weak. Kiwi was the market that I really wanted to get short on. So yeah, I basically looked at getting short on the breakout, which was this candlestick here. Ended up going short there. Stop loss above the swing high, and I just took profits at that swing low. Again, it was a Thursday. If I'd held that into Friday, where did Friday kind of close? In and around this area here. So yeah, I could have had a little bit more out of it, but I was happy with what I got out of it. Ratish, from everything that I've seen in the 5+ years, the currency strength meter is the most solid. Yeah, it's a solid tool to use within the markets, because it doesn't lie in terms of what's going on in terms of price action, right? Because this could go for any strength meter, by the way. I'm not just saying that the one I use is good. It's just that the one I use, I trust, right? And there's a big difference between trusting something in the market. There's been times where I've been on the streams in the past where I've said, I should have followed the currency strength meter, and I didn't. And look, I got burnt because I've been using it for like I said, over 4 years now. It's done really well for me. And whenever I have maybe, and we all have it, we have periods in the market where we're not feeling in sync. Sometimes you feel like, especially if I've been on holiday, right? If I've been on holiday for a couple of weeks and I come back, I feel out of sync with the market, and I can just refer to the currency strength meter straight away, refer to the fact that there's something going on there, and I can go and trade those markets if I see setups, so that's why I use it so religiously. Right, guy, there was a HNS on the Kiwi dollar example you did. Trading is amazing that people can see the same chart in different ways and still be right. Yeah, right. You got that HNS shoulder pattern there, right? With the left shoulder, head, right shoulder. And this is a really important point you've actually made here. You've said trading is amazing that people can see the same chart in different ways and still be right. Now, I used to say, and it's quite, I would say it might be controversial in terms of the language, but the way that I see trading is that you can see that there is, or the way I look at it in terms of strength and weakness, doesn't really matter. Any strategy works in a trending market, right? Because it's one directional move. Obviously, if you trade in reversals, then it might not work in that sense because it's a trending market. But yeah, essentially, if you're on the right side of the market, then any sort of strategy will work, right? One last question, and then I've got a guest to bring in for you. I can just see Jono's just popped in, so I will introduce Jono to you guys in a minute. But yeah, Ratish been working on a dashboard for the fundamentals, but it's still far. Yeah, same here, Ratish. I've got one building it as well, and I'm not quite there yet. It's not quite where I want it to be. But yeah, let me introduce you to a guest. I'm going to bring on Jono now, or as known as Trading Martin online. So let me bring him and add him into the stage.
Hi, John.
Hello.
Can you hear me?
Yeah, I can hear you well. You okay?
Yeah. And you?
Yeah, not too bad. Thank you. So very excited to have you on today. It's I've not really had any guests come on in the past, so you're our actual first guest on a live stream.
Cool.
So yeah, welcome. Do you want to tell us kind of in the guys who you are, what you've been doing?
I can tell you, for example, how I came into trading, if that would be interesting.
Yeah, let's do that.
So when I was like 14 years old, I was all the time playing games like Fortnite, Minecraft, and things like that. And I was streaming on Twitch. I began with YouTube, and then I switched to Twitch, and it was kind of good. Like I had 40, 50 viewers, and I already made like 700 euros a month, which was kind of crazy. I was 15 years old, 14, 15, 16 years old approximately. And then the day came and I got banned on Twitch. So my world broke down, and I didn't know what to do with my time because I always wanted to do something after school. And a friend showed me crypto, and one time he had this screen recording on Discord, and he had a position opened. I think it was Bitcoin with a, I think 50x leverage. And it was crazy to see him when he was shorting after a pump, and he made like crazy money out of it. Of course, it wasn't without any analysis, but I've seen how much money you can make out of it. And so I came into crypto, and I also documented my whole journey on my YouTube channel, how I got into crypto. And after approximately 1 year, some people told me about the funded challenges and Forex, everything. So I started to trade, I tried to analyze the dollar index, EURUSD, and gold. And somehow it was even easier to me than Bitcoin. Of course, it was at the beginning hard with the news and everything. But by time I got more and more into it, and I thought about changing my whole channel from crypto to Forex. And I've heard that at Forex brokers, you can get scammed pretty easily. For example, if you're too profitable that you can withdraw or things like that. So I searched all the time. And the only brokers that looked fine to me was Blueberry Markets and RoboForex. So I tried to compare those brokers, traded there and traded there. I had there a copy trading profile at Blueberry. I also had my PEM profile so people could copy my trades. And I've never had the broker where I could trade that smoothly like on Blueberry Markets. So that's how I came then to Blueberry Markets. And yeah, now I'm like, I would say with the current crypto market, I'm like 70% in crypto and 30% in Forex, like actively trading. But for me, I've tested so many Forex brokers, also crypto exchanges. And for the Forex brokers, definitely Blueberry Markets to me.
Oh, awesome.
And yeah,
that's good to hear. That's good to hear.
That's how I came in contact with Ben, because I heard about Blueberry Markets from Donvo, a pretty big streamer also on YouTube. And it always looked cool how he was trading gold with like 0 commissions and everything worked well. And then I came in contact with Ben, and we started to work together. So yeah.
Awesome. So you're predominantly in crypto still, like, so do you trade the CFD on Blueberry, or do you do a bit of
It
both?
depends.
Do you have some...
When Bitcoin was at like 40,000, I wasn't that much into crypto because if there is missing the volume, it doesn't make sense to me. So in these times, I'm trading Forex and my funded accounts. But for crypto, I'm trading on a crypto exchange, and on Forex, I'm trading for Forex, I'm trading on Blueberry markets. Because when it's crypto, I'm more used to the web. But also there, I was already talking with Ben that we may also start with crypto, but I need to try that by myself first.
Yeah, no, definitely. Yeah, we do offer CFDs on crypto, but obviously crypto trading can be a little bit different. You can actually hold the asset, can't you, rather than CFDs just kind of trading the price of it essentially, or betting the price, whether it goes up and down, where you don't actually own the underlying asset. Whereas if you're on a crypto exchange, you can own it, and you can kind of suffer both ways, I guess. If it goes down, you'll be suffering, but also you can benefit from trading it as well. But that's cool though. So you've got some funded accounts as well, and you've like that.
I wasn't that lucky there because I had an account at my Forex funds, I had an account at the funded trader, and the prop firms are somehow falling down. And I mean, all in all, it's every time the best to have live accounts. So you can't compare a Blueberry market no spread account with like a funded account. It's like a different world.
Yeah, I'm interested though, because a lot of our traders, I assume, let me know in the chat, guys, that if you do have like funded accounts and that. So do you find funded accounts sort of easier to trade than your own money, or would you say that it's
no? To me, it's not bad to start with trial funded accounts, or maybe just to try buy a 10K account, because you somehow get used to the risk management, so you don't risk too much in a trade, and you have like this set max loss for a day and the whole loss for the whole account. And if you are profitable on a funded account, you get double profitable on a Blueberry markets account, because it's a different world. If I open a trade on a funded account and I go long, the position opens, for example, here. If I go on Blueberry long, it opens right here. It's you can't compare it. You can withdraw whenever you want, and it's you don't have any pressure or whatever.
Yeah, that's it. I always find that I'm better at trading my own money than I am trading with other people's or on funds and things like that. I do have a funded account as well, but I always find that I don't know if it's the mentality of, because it's mine, I own it. Whatever happens, it's because of me. I press the buttons and things like that. There are sometimes when you traded funded, some things are out of your control a little bit. Like you said, the spreads can be a little bit too much out of control, or there can be times where your max loss limit comes in, and then you don't want to, or your daily loss limit comes in, and you don't want to take any more trades, even though you see a very good setup. I mean, some funds that I've worked with in the past, you can't take more than 2 positions on the same market, which can be really frustrating if you're trying to kind of add into positions and things like that. So yeah, I'm a big believer in kind of trading your own funds and growing your own funds. I think, people out there that might want to try and grow their accounts, then go onto the funded, try and withdraw some funds, put it into your own account, and then you can try and trade that way essentially. But yeah, do you want to show? I don't know if you can you share your screen. Do you want to show us how you trade? Do you want to show us your
yeah, I can show you. Yeah, 1 second.
I think
it's a pretty funny story. 1 second, I'll just close here a few things. I have my own trading indicator.
Okay, nice. So you built that yourself, so like an algo.
Yeah. I'm not sure how it works here.
So can you see a tab at the bottom saying present at all?
Yeah, I have it. Can you see something? Oh no, I need to accept it here. I'm on Mac, so it's a bit different. 1 second. It's written here that I would need to restart my browser that I can share my screen.
Okay, no worries.
So should I restart, or should I just talk about it?
Yeah, just talk about it. Yeah, happy to talk about it.
So I've started when I started with trading. I tried like all these indicators, MACD and EMAs, everything what's out there. And one friend showed me market cipher from CryptoFace, and it's like you have the momentum, you have the MACD and everything included. Also like some manipulation signs and possible money flow and things like that. And by this indicator, everything began, and like then it got kind of professional. And since then, I'm only trading with this, and I've made my own indicator that has like a few things from market cipher combined with other things that help me pretty much. So the most tools I'm using is, for example, the Fibonacci tool, the EMA is 200 EMA, the momentum, and that's actually all. I also have some other things in my trading view, but still I don't look at them that much anymore. So to be honest, if I open a trade, it's somehow the feeling that I have. If I open a trade, do I feel confident, or does it look good to me? The experience that I have. Is there maybe a golden pocket? Is the momentum bearish, bullish? Like
Okay,
things
so
like that.
you've said something there. Golden pocket. What does that mean?
It's a if you use your Fibonacci level, and you have like these 2 points in this
Zone.
point, in this zone. Sometimes the price bounces or finds support or resistance, and this works very good actually.
Okay.
But also there you have your different settings. Like if you double click on the Fibonacci retracement tool, you have like 20 possible points, like 0.272, 0.382. And then you have the golden pocket, and the golden pocket is for me, of course, no financial advice, 0.618 and 0.66. These are the only points that I'm using.
Okay. So if I just did this for a second, let's just theoretically, because this is trading view, so I might be able to kind of get at what you're talking about in a way. So if I grab a Fibonacci retracement tool, just draw that on, and then go into the settings here. So you said there's 61.8, 0.61.8.
You can leave that, yeah. And then I have a new one, my own. Like it's not there. You need to write it by yourself. It's 0.66, and I would delete all of the others that you don't get lost in it.
Okay, so delete 38,
like
23, 78. We can delete the one and just leave the 0 and the 1.
I mean, it's useless, so you could just turn it off. So these are the most important zones. And now, if you, for example, go in the maybe go to EURUSD if possible. Last time I was in NZD-USD, it's like 1 month ago. And then you have your possible ways to use your Fibonacci tool, for example, from the lowest point to the highest point. If you're now in the daily, exactly, like from this top to the lower position. Exactly, and there you would have your.
Sorry, I draw my fibs backwards.
Exactly.
So you go from the swing low to the swing high.
Yeah, exactly. But for example, here in this situation, I probably wouldn't use it.
Right.
I don't like situations like this, but that's what I mean. Like you have to gain the experience, and if you use the Fibonacci tool for 5,000 times, you somehow can guess if it will work or if it won't work. And to me, like everyone is talking like zero emotions or things like that. It's most of the gurus are talking exactly the same things, and most of them don't know even what they're talking about. You always have a few emotions in it, and it's also good to have some emotions in it. And only because some people are telling you, for example, to don't risk more than 0.2% of your account. To me, that's useless. Like in the beginning, I've flipped accounts in crypto, of course, with zero risk management. If I lost the trade, like I've maybe flipped like an account, like let's say $10 to $60, and then I've lost everything. But with this strategy, or with this, by that I learned so much So I by time I knew where to put my stop loss, and sometimes my stop loss is there, sometimes I'm opening a new position, and like it's hard to explain in a short term, in a short time here.
Yeah. No, I get what you're saying. So essentially, you kind of identified a strategy, and because you're confident in that strategy now, you don't need to risk sort of small amounts. You can kind of go in with higher risks and things like that.
That's not what I meant. It was more for the trading beginners. Sometimes you only risk that much. Sometimes you risk this much, but you also don't have only one account. If I am now making an account, let's say on crypto or wherever, it can also be Blueberry markets, and I'm putting there 1,000 USD. However it's used for you, like what is for you much money, what could you lose? But when I'm now putting, let's say, $1,000 into a new account, I would be trading it with zero risk management. Like maybe I could lose $700 in a trade, but it just depends on the setup. Maybe I'm risking there that much, and maybe I'm risking there that much. But I've just learned for me that I need a 1.2 risk to reward or something like this. To me, it's not working.
Yeah, that's fair enough. And I think a lot of people are really different when it comes to risk, right? So I'm very risk adverse. So I try and look at, so just to kind of give an example of how I would look at things. Let's say I'm trying to trade euro dollar short, and prices come up towards this kind of area of resistance. I know I've just made that up there, but a lot of people would look at it and go, well, I want to be euro dollar short. So they'll look at kind of every bearish candle in terms of a way of trying to get short in that market, where I always look at sort of where's the most ideal area to get short in terms of, so I can maximize my risk to reward ratio. So let's say I wanted a stop loss above that swing high. The closer I get to that, I can maximize that kind of risk reward ratio, and also kind of risk a little bit less by doing so. So that's the way I kind of look at things. So obviously that rejection came from these kind of highs within here. But if I manage to get as close as I could to that, it allows me to kind of risk a little bit less. But it's interesting you say that. So how would you say you were emotionally then? Because is that something that, because I know crypto can move quite quick, right? Did you suffer a lot of losses in the beginning in terms of
to me, I can remember it. It was on my dad's account on FTX. I deposited 300 euros, which was very much to me at the beginning. And like in the first days, I made like $30 a day, and I was already thinking, if I'm now making $30 a day, maybe if I multiply it by 30, I make almost $1,000 a month. But you can't calculate it like that. And like after 4 days, I lost everything. But can you hear me? Okay, I think there's a connection loss. Okay, let's just wait. Yeah, now I can hear you.
Okay, yeah, I think I just crashed then for a second.
Yeah, no
sorry about that.
Yeah, and then like the third or fourth day, I lost everything. But then I've tried like with smaller amounts, and with the time you just get a feeling how to manage your positions, how much you should put into this position, how much you want to risk there. And what works for me pretty good is like that I have my high risk accounts, and sometimes I flip them by like 5x, 6, 7x. But of course there are also then days where I lose a whole account. But this is what works for me best. And if you look at really profitable traders, like for example Donvo, you see everyone has their own strategy. If Donvo loses now, and he has, let's say, 500,000 in his account, he will lose in one trade sometimes $80,000, and in the trade he will only make $4,000 or $5,000, but he's winning, let's say, 20 days, and then he gets the loss, and still he makes like in these 20 days, let's say 100,000, and if he lost 60,000, he's still profitable. And I love these people that are all the time like negative. This can't work. You're not profitable or whatever. But they don't even believe the stats that he has, for example. Like all the people that are saying this or are judging a strategy are not profitable, because every profitable trader knows that everyone has a different strategy and everyone is trading differently.
Yeah, no, 100%. One thing that I try and track is, so like if I'm in a trade, I'll try and track its performance after I've closed out of the trade. So a lot of the times, if I've got like 0.5R or 0.1R, whatever, sometimes I'll go and track it for the next couple of weeks following on, just to see how far it did go and whether that could be something that I'll look into in the future in terms of, okay, that actually went like, that could have gone 5R, that one. Okay, or make a note of that. How many times have my trades ever gone to 5R? But, 0.5R or negative risk reward, I think, has a very bad reputation within markets. But it can be very profitable because your win ratio goes up. Your win rate will go up naturally because you're not targeting as much. I think if people or beginners maybe looked at a negative risk reward initially, it wouldn't actually be a bad idea, because you can gain a bit of confidence with that.
Yeah, definitely.
So, I definitely think it's something that people should look into. If anybody's struggling on the chat and they think that they're trying to target 3 to 1, 4 to 1, and it's not working out, then just reduce that sort of that target range.
Definitely, yeah.
So, what's your sort of trading ideas for this week? Have you been trading this week?
I was in a Ethereum long today, and it was pumping even without Bitcoin pumping. So this was kind of lucky, to be honest. But I enjoyed the profits, of course. I would like to show you the setup that I had, but with the. Maybe can I send you a screenshot in the chat, and can you show it in the stream or not?
Yeah, definitely.
Okay, then I'll send you the screenshot. 1 second. This was my. Now I'm more into crypto, to be honest. Wait.
Yeah.
Or maybe I'll send it to you on Telegram, because here it's not working.
Yes. I'll get that up.
Okay, I've sent it to you in the private chat. So this was my setup for Ethereum. I made a long position there, and to explain it, I had the golden pocket, so the pretty big support, and in the 1 hour time frame, I had the 200 EMA. So that's why I was kind of confident, and I had a pretty near stop loss. So there I managed my risk. For example, I had a risk to reward 1 to 5 or something like that. But that's what I meant, that sometimes I make it like this, sometimes I make it like this. And this was the 1 hour setup. I've sent it to you. And that's why I opened a position. Where I have the red point, I opened a position.
Okay.
And there you can see, like, I have the golden pocket. I have the 200 EMA where it bounced off also the last time. Bitcoin also didn't look that much that it will be sold more and more and more. And that's how the setup came. But if I look at DXY, let me think. I could expect EURUSD to fall more, but in the long term, like in the, let's say, next 2 weeks, no financial advice, but I could see EURUSD going a bit higher. But now for example, tomorrow I see it falling, to be honest.
Yeah. So in cryptos, you look at the correlation between how Bitcoin's performing to other cryptocurrencies. So let's say we've got loads of new cryptocurrency traders here that want to trade crypto CFDs with Blueberry. What would you look at in terms of correlations between those? Because when I used to look at cryptocurrencies, there used to be a lot of times when Bitcoin was performing really well, other cryptos perform really well. Is that still the case, or is that not the case?
Yeah. Most of the time, like if you're today with Ethereum, it was really weird. I think there were some bullish news, but Bitcoin was going a bit up, but Ethereum was totally exploding. But in, let's say, 99% to me, if Bitcoin is pumping, most of the other coins are also pumping, of course, if they're not manipulated. But if I'm trading Ethereum, I'm also looking at Bitcoin. And the same with EURUSD. If I'm trading EURUSD, I'm first looking at the dollar index, making my levels, where it could theoretically go, and then I'm looking at EURUSD.
So essentially, you're using the Bitcoin chart as your index for cryptos.
Yes, like the dollar index.
Like how you would with dollar index. That's really interesting. Okay, so that's good, because that, you know, people are looking at cryptos. So do you trade any of the sort of altcoins or anything like that?
Sometimes I'm looking on a crypto exchange, like the coins with the highest volatility. Sometimes they are pumping 30% in a day, and then I'm looking, maybe I could open there a position, but it happens like maybe once a week if I'm lucky and find a cool entry. But most of the time, like probably 90%, it's only Bitcoin, Ethereum, Solana, and maybe like these little coins. Mobile USDT I was trading like 2 weeks ago pretty actively. Then Ethereum Classic, but most of the time only Bitcoin, Ethereum, and Solana and things like that.
Okay, so when you pick these, sorry, I'm just asking you these because I'm interested myself. When you pick these coins to trade, that may be like this sort of altcoins, what is it, just to do with the market volatility that you choose those, or do you have to look at, because I know it kind of has, I'd say, similarity in terms of like when you look at stock markets, do you look at the market cap for the coin? Like, do you look at if there's enough liquidity or anything like that?
No. The only thing what I'm looking is the volume of the token. If the volume is like at 100,000, it doesn't make sense, because you open a position and you get swapped also when closing the position. So when I'm taking an altcoin, I want to see a high volume, a cool candles, like not these weird candles where you can see that there is no volume. And then I'm looking like for possible levels, or could this be a trick to liquidate all the people, and like things like that. But as I said, it's not that often that I find there a good position. But these little altcoins are the fastest way to possible flip your account. So this is what I was doing back then. And now you've transitioned into sort of more stable markets, I guess. Stable.
Nothing's stable these days, I don't think.
But I like it when there is more action. And as I said, the cool thing about this whole market in crypto Forex is, if crypto is weird, or there is no volume, or it's a bad day, you can just switch to Forex. And in the beginning, it might be hard, because you may don't understand things like the news, or many things will be new, but still you will get used to it by time. And if you get used to Forex and used to crypto, you're very good to go. To me.
Oh, awesome, guys! If you've got any comments for Jono or Martin, trading Martin, then throw some questions in, because we don't talk too much crypto on the channel that often. I do quite like to look at sort of I mean, the only chart I have really is sort of Bitcoin on here on a crypto expect sort of area. So what are your thoughts around Bitcoin at the moment? Because we had quite an interesting dip recently, didn't we? And I was kind of looking for this 52K area to be tested before seeing a bit of a rebound. But
I'm pretty much on. I'm pretty much on Twitter and looking at the other setups from other people. And if everyone is talking, like from 100 people on Twitter, 90 people were talking about exactly this level that you have there. The chance that it won't go there is pretty big. So I'm somehow thinking out of the box and thinking what could happen to destroy as much people as possible, or like you need, sometimes you need to think like it. And Bitcoin wasn't looking to me like dropping to 40,000 or 45,000.
No.
52,000 was possible, but also this I didn't have there a limit order. For now, I see like the golden pocket wasn't respected, the short golden pocket, like now for the last days when we were pumping.
Yeah.
So maybe Bitcoin goes back to like in my eyes, maybe back to, I don't know, 65,000, 66,000,
Right.
and then I'm expecting the next pump. So I can't see Bitcoin now at going down to 52,000. I don't think so.
No.
But of course, no financial advice. Everything could happen.
No. Yeah, of course. What do you think around? Do you follow much of the crypto news and things like that? Because one interesting story I find is the fact that Donald Trump went up in the polls and Bitcoin bounced quite aggressively. I know he's endorsed cryptos quite a lot. He's had a bit of a 360, whereas the Biden administration was pretty much against cryptos. So have you seen much impact by that?
Yeah, of course. That's the only problem in crypto. If there are news like that, you don't have it on Forex Factory, or it's happening randomly, or if the German government is selling their Bitcoins, things like that, you can't see it. So these are maybe negative points at crypto, which you most of the time don't have at Forex. Like it's not that extreme. But also there you have your stop loss, and you still have the 50-50 chance that it goes into your direction. So if you have your position and you have your good setup and whatever, it's with the news, it's still 50-50. So it doesn't hurt you that much in the long term. And of course, you can speculate on Trump or whatever happens. But there, I don't have enough knowledge to know everything. But of course, things like Trump is bullish, Biden is bearish, and like these. I mean, it was pretty clear that Biden won't be the next huge number.
Yeah, no, I get you. I've had a question come through. If you don't mind answering this one. Well, guys just asked, how does the dollar index play into Bitcoin? Does that play into your analysis at all?
It's sometimes, but to be honest, when I'm now trading crypto, to me, the dollar index doesn't make that much sense to compare with Bitcoin. Like for EURUSD, it's the world to me. Like I couldn't trade EURUSD or EU without DXY. But for crypto, if I compare it right now, it's like there is no correlation. It's like
zero.
Maybe 10%. So I'm not looking at DXY anymore if I'm trading Bitcoin.
Yeah. So what we established, right, guy, in case you missed it, was that Martin uses Bitcoin as almost his DXY for other crypto markets. So we'll be looking at if Bitcoin's kind of rallying in the markets, he'll go and look at other cryptos to see if they're, I guess, sort of not performing as well, but could perform as well, essentially. So I mean, I'm not 100% on this because crypto is not really in my my range of trading hasn't been for a while. But I know there's other things that have happened in the crypto world. Obviously, there was the sort of recent kind of SEC filings for Ripple and things like that. And I know that Ripple's price has been quite low. So I haven't even looked, to be honest, to compare Ripple with Bitcoin. But would you say Bitcoin's rallying, Ripple's kind of gone a bit sideways? Would you go look at something like Ripple?
Ripple was always, now the last years, more or less that to me. Like sometimes you had there some good options to open a position. In the long term, I don't see XRP at 20 cents or whatever. Like, of course it could happen, but to me, this zone where we are right now and the pump that we had right now shows that XRP still isn't like comparable with Dogecoin or Shiba. Like there is something behind it, but I don't like to speculate on any news that could happen with the SEC or whatever, which problems they have with XRP. I don't like that so much, to be honest. And compared with the gains that Bitcoin has made or other cryptocurrencies, XRP isn't that much my way to go.
That's fair enough. That's fair enough. I just had another question come in. Sorry. Well, I find crypto to be very technical. Is that what you find as well?
Depends how you what you mean by technical. Like, of course, for me, it's 80% only the indicators, and 20% it's like the knowledge that I have in the market and where I have the feeling that I could be like the liquidity for someone else. So I'm just putting there my levels and possible setups which could happen, and then I'm thinking, what was in the past? Could this maybe happen again, or is it looking bearish? Is it looking bullish? But the principle is almost the same compared to Forex. Like, if I'm thinking, I don't do nothing different at Forex than to crypto, only that I'm looking at the dollar index. But Bitcoin is like the dollar index to me.
Yeah, I guess a point I would make is in terms of like what you said earlier, there's a lot more sort of data points that you can reference to in terms of FX. There's a lot more, like you can go into an economic calendar and you can see what currencies are going to be impacted by what data that's coming out. Whereas you don't really have that for cryptos, or if there is, I haven't seen one that could impact it.
You could theoretically, if there are some CPI news or whatever, you could, it's also sometimes very volatile for Bitcoin, but it's not comparable to EURUSD, where you get like these extreme candles. But as I said, in crypto, most of the times it's random news. Like if someone was like, as you said, with Trump or with Biden, it's not like in Forex with the economic calendar to me.
Yeah, it's like what I like to call headline risk. You just don't know when it's going to come out, and it just it's just gonna pop out whenever it wants to, and ruin or make your day.
But still, that's what I meant. You still have the 50-50 chance. Like, for example, at Biden, you didn't have a 50-50 chance. It was pretty clear that it's bullish for the crypto market. But if there are some upcoming news without knowing it before, you still have most of the time the 50-50. And if you are already in a position, we traders have we're trading by stats, and if there are 100, if we always have the 50-50, everyone knows by the long term it doesn't affect that much.
Yeah, no, very, very true, very true. So you said something. You said 80% of what you would look at is more towards the sort of indicators within the market. So why did you go down the indicator route rather than, was it just because you wanted to find something that had an edge, or because I know a lot of people
that's how I got into it. And as I said, I found the YouTuber Crypto Face. A friend showed it to me, and then with the indicator that he used, I've seen so many opportunities there. And most of the people say people that use indicators aren't profitable. As I said, everyone has their own strategy, and to me, like painting there some resistance or support, like these lines, it never worked for me. And the only things that work for me perfectly is the golden pocket, is the momentum, is for example the uptrend, the downtrend. Sometimes the people are making it themselves too complicated, and it isn't sometimes that complicated.
I think it's one trait that I notice is you could be doing really well, then that strategy may go through just a small period of drawdown, and you try and find reasons to why it's not working as what it did previously. You know, that trade made X amount. Why isn't this trade made X amount? So I think a lot of people think that they need to kind of strategy hop. But you know, one thing I've really taken from this, Martin, is what you said about using Bitcoin as your DXY. I've got a chart up here, which is Bitcoin, which is the orange line here, and Ripple the white line. And we can see where we had that sort of period, that bottom in Bitcoin, and we've seen that rally. We've had that upside in Ripple as well. Look at the downside where we had in Bitcoin. Ripple's gone sort of sideways as well, which I find quite interesting. So that
but you need to go a bit back. Now it's implemented to Bitcoin, but in the past, when Bitcoin was going up, Ripple is still the all-time high from Ripple is okay. I have here the wrong chart, but compared to the all-time high and compared to where Bitcoin right now is, it's very sad. The all-time high from XRP was 0.84, and we're now at the like almost all-time high from Bitcoin, and XRP is still down 84%. So you can't. XRP is like if you're trading something different than crypto.
Yeah, no, that's right. That's fair enough. But yeah, no, that's great. That's great. Where can people kind of find you and follow you and things like that?
On YouTube, but I'm only making German content now, so it will be kind of hard. But also there, as I said, I documented my whole journey. When I started to trade with zero knowledge, I also uploaded a video where I lost my first money that I had in the crypto account, as I said, from my dad. So it's there, everyone can see everything, and I'm not selling any courses or things like that. So everything is there for free.
Oh, awesome. So if you want to go and see someone very, what's the word I'm trying to say? Very open, letting everybody in to kind of view that is quite interesting. Not a lot of people would show that side of the industry, right? A lot of people kind of show their wins and what they've done and how they're successful now, rather than the building blocks that get them there. So yeah, if anybody wants to go see that, then if you drop me a couple of links, I can drop some links into the description.
Yeah, I'll send you my YouTube link on Telegram.
Yeah, awesome. And I'll drop that in the chat for the guys as well, and then they can come and see you. But guys, have you got any more questions for us? If not, I will be ending the stream very, very shortly. Let me just pop this link in the chat box. And you said you're on Twitter as well?
Twitter only for myself, but I'm not posting there anything. Only reading other tweets.
Okay, yeah. Using it as a scanner.
Yeah, somehow. And funny if I see some tweets from people where you know that they don't know anything.
Yeah. You can just see them being wrong all the time.
Yeah, it's like you can always make the difference from that what they are writing.
Yeah. Like it's like when Jim Cramer calls for NVIDIA longs, you go and sell it.
Something like that.
Yeah. All right. Well, thanks for joining me today. I really appreciate you coming on.
For the invitation.
Yeah. I'd love to have you on again in the future as well, if you're up for it, and we can have your chart set up and maybe show us a few
maybe also live trading. I'm open to everything.
All right, awesome. Well, yeah, thank you for joining me, and really appreciate that, guys. If you could leave the stream a thumbs up, I'd appreciate that as well. I'm back back on Thursday, same time, and I will catch you all then. Cheers, guys.
Perfect. Thank you very much. Have a great day.